million. So if you have $1 million umbrella, you technically would have 2 million in coverage, the first million plus that million umbrella on top. And probably you talk to 10 different brokers, they all have their phrases on how to, like, how much should I have, right? My first thing is always to say, well, like, how much are you going to get sued for? Like, it is generic, so I can give some tips and tricks of, like, what you should look for is you got to think is if someone comes to your property and there's a lawsuit.
Hi, everybody. Jose Luis Morales here. Welcome back to another episode of the Morales Group Show. Today, we have Matt Sudica. He is an insurance broker with OB Insurance, and today he is going to be going over with us rental property insurance tips and advice and how to pick insurance on rental properties. Welcome to the show, Matt. How are you?
I'm doing great. Thanks for having me.
I love it. So for our viewers that don't know who you are, who is Matt Sudica and how did you get involved in this wonderful world of insurance?
Absolutely. So Matt Sudica, I am CIO over at OB, and what that's fancy for is I am like the outward sales part of our company, right? I'm the one that will take care of our clients and any of our partners and have all the employees underneath that work in that area. I got into insurance. My dad owned a State Farm for 40 years, along with his brothers owned State Farm. So I was kind of born and raised in the insurance space. And so I started at an early age as a State Farm on my own and slowly got into real estate by building an insurance company with Century 21, the real estate company on the homeowner side. And then through that, I really got to know realtors and started to love the real estate space, the rental space. I first got into that kind of on the personal side. And then when I found out that I could be an expert at writing insurance for these and something I like to do personally, it really moved my passion over to providing insurance for the rental space. Met these two guys from Chicago, Aaron and Ryan, who were starting this company called OB. That was going to do a digital version of insurance for that space. And it was just the perfect fit. Came over in 2020 and have been working with the company ever since.
I love it. Now, this is why I like this topic. A lot of people don't realize the importance of good insurance on rental properties. And a lot of people also don't realize that sometimes they think like, oh, I'm saving money here. But the reality is that maybe they're getting less coverage. So what I wanted to do in today's episode, just for our viewers, is I wanted to really just dive in deep as to like, okay, if you own an investment property, like what's the important type of coverage that you should be looking for? And maybe we can even go over some examples of like things that maybe people don't expect to happen that actually happen, and how having the right coverage can actually protect you. So like, let's say that I just bought a rental property and I wanted to get insurance coverage on that rental property. What questions should I be asking my insurance broker to make sure that I have the right coverage for the rental property? Or what questions would the insurance broker be asking me to see which rental coverage best meets my current situation?
Yeah, absolutely. So going down the path that you're going to want to have a conversation, right? So for us, you can come to us direct digitally, or you can have a conversation. So going down the conversation route, you're on with one of my team members and you just got this rental, you're all excited. We're going to need to know what we call the COPE information, or I call it the year, make, and model of your space, right? So where's it located? When was it built? What are you planning to do with it? Is it going to be Airbnb? That's a big subject right now. Short-term rental. Are you going to keep it vacant? Are you going to remodel it? Are you, fix and flip? So we're going to ask kind of just overall business-related questions of, tell us about your asset, and then what are you going to do with that asset? And then from there, we're going to discover things like what you paid for it, what you have into it, and what you're going to do. And then we're going to be able to guide you into the correct, policy. So if you're, going to rent it out and it's you just got it and it's a newer build, or even, whatever, like after 1970, after 1980, whatever, we're going to then get you what's called a replacement cost estimation, which is, i.e., not the market price, right? You just paid the market price for it, right? Mm-hmm. That was between you and the realtor and the seller, right? The insurance replacement cost is your place tomorrow after you close, as you're driving to it and you're super excited, lightning hits it and it burns to the ground right before you get there, and the insurance company has to come out and rebuild that for you. What would that cost if on that next day you got to call a contractor and they put a bid together to rebuild that house for you? How big of a check would you have to write? That's going to be your replacement cost, to put it in kind of 101 terms, right? And that would be the craziest scenario if that happened to any of you. So I apologize if I jinxed anyone, but yeah, those are the conversations we're going to have. After we kind of understand what we need to cover it for, we're going to ask you some business related questions as well. Does it have a basement or something, where we might need some backup and sewer or drain, coverage? We're going to go through some of the endorsements that you might want to add on. Is it, it's in California, does it need earthquake? Oh, you're right on the water, do you maybe need to get some flood insurance, right? Or, a lot of times your lender will dictate that. And then we're going to go into some business related decisions of your deductible. Do you, what makes sense for you premium wise and deductible wise? 500, 1,000, 2,500, 5,000 deductible. We'll go through that. A lot of the deductible, I call it a business decision, because the way I look at it is you have to balance the higher your deductible, the lower your premium should be, right? And you have to say, hey, I'm good with taking that higher deductible because of the savings in the premium. And this particular property, if at any time in the next 5 years that I'm going to hold it, someone calls me out of nowhere and says, you have a claim, give me $5,000 or give me $1,000. I'm going to have it. It's not going to put me under. And that's kind of how the deductible works, right? That same example, you could have a claim at any time and you're going to have to shell out this certain amount of money as the first dollar part. And you want to make sure from a business standpoint or your NOI or however you're looking at your P&L that you can afford to do that. And then does it match the risk, right? If you're going from a $500 deductible to $5,000 deductible to save $50, maybe that's not really a great trade-off. But if you're saving $2,000, maybe it is. So those are going to be a lot of the conversations we're going to have. A lot of the coverages that I didn't bring up are built-in coverages that, I'll speak for our policy and for most rental policies that are going to be built in that you're going to need, and you don't have to make a decision on those. Those are going to be included. That's your general liability, so if someone gets hurt on your property and you're liable for something, that's going to kick in. There's your rental income, right? Where you have a loss and your tenant is forced to not be able to stay in the space, and therefore they're not going to pay you rent and you're out revenue. Like, none of us are in the rental space not to make revenue, right? So those coverages are going to be, built into our policies and have you taken care of. But overall, it's a pretty simple process. And that's why I mentioned on the other end, we do even have the digital version of this, where if you are someone who just wants to put in your address and have us pull the data and provide you an instant quote that you can bind yourself at 3 a.m., we have the ability to do that as well. So we're set up both ways, either that full conversation, or if you're the DIY or DIY or whatever the cool term is right now, the do it yourself, we have that ability too.
I love it. That's awesome. Good. Now, what happens if somebody lives in a property and then they turn it into a rental, but then they forget to turn it into a rental in terms of insurance? Could that be a cause for them not covering the claim? And how important is it to have the right coverage when setting up your insurance? And what are the consequences if you don't?
Yeah, so this is one of those what should, what could, and what probably does type of questions for you. So in a black and white contract way, yes, if you have a homeowner's policy on there and you're living there as your primary home and then you end up starting to rent it and you don't switch policies, technically, yes, that carrier could deny a claim because, it's no longer a homeowner's policy that should be on there. It should be a rental dwelling. Do I think that majority of carriers would? No. But I don't know if I have to put this on the recording, this isn't legal advice or claims advice or thing, but what I'm saying. But ultimately what you should do is make that change. Once you go from, homeowners to a rental, you really want to change that, because more importantly than will they cover a claim, it's, do you have the right coverages? Like we talked about, the rental insurance coverage. Like you wouldn't have that. So even if they cover you from, let's just say they're a nice carrier and they said, oh, mea culpa, I'm sure you didn't mean to do this. We'll still cover your loss and replace your garage, right? Or fix the roof or whatever. Well, they're not going to give you rental income coverage, so you are going to lose that. So it's really in your best, in the best method to change for your own being, right? Not even, whether or not you'll have coverage. You definitely will be missing coverages that you need as a landlord. And I think that's more important. And, it should be a pretty good trigger that if you're in the space, I see this happen every once in a while. It's normally clients that are just not in the rental space normally, right? They're just like they were, been a homeowner for 30 years and they watched HGTV one too many times and decided that they were gonna, rent out their place. But for the most part, I see most people when they do transition, it does trigger that event. They are making a phone call and doing that, which is good.
I love it. What about you mentioned something earlier that some of the questions that you're going to be asking is it an Airbnb? Is it vacant? Is it a flip? Is it long-term rental? What difference does that make as it relates to insurance coverage, and how does it vary? Like, is it more expensive to insure a vacant property or a flip property versus an Airbnb or versus a long-term rental? Can you elaborate a little bit on that?
Absolutely. So, in very general sense of the term across the board, uh, if it's vacant, that's probably a lot of times you're getting a more expensive premium than if it's rented. Short-term rentals a lot of times do tend to be a little bit more expensive than if you're doing a full annual rental. But more than what it really is it changes the writing carrier or the potential carrier that you're placed with is really, and that's really what makes it more expensive. A lot of times is that, if you have just a regular rental that's, you're not doing any remodeling and it's got an annual tenant in it, there's 30 carriers, 50 carriers, whatever it is, right? Like that are interested in that. Vacant, there's only a few that will write a vacant policy, right? And then, Airbnb and Verbro, is it Verbro, VRBO?
Uh-huh.
I haven't used that one, but I see it, the commercials now for it. And those are newer. So there's some carriers that have adapted and started to create an endorsement where you can be covered for that and that they will allow you to. It was like when Uber came out, right? All the auto insurances, like 99% of them didn't have the real reason to or ability to cover you if you were an Uber driver, right? So you were either not telling your State Farm agent or your agent about it, right? And you weren't covered correctly, or they were trying to make shift. And that's similar to the rental spaces that there is now carriers that will allow for it, but there's still not every carrier that will allow for it. And so that's usually where people see the price increase is just lack of supply, which instead of creating demand, it creates a little bit, increased pricing. And that's usually the truth behind it. So, not necessarily something that I would run and hide from as far as being an owner and doing that. I don't think insurance is that much more expensive where it would dictate me from not doing that. Vacant, a lot of times if we see someone that has one that's vacant, it's usually because they're going to do a remodel or some type of, construction on there. And then that's probably fallen into like the builder's risk category. And those tend to be just a little bit more expensive, just due to the exposures that you have going on at the space. You got construction people over there working, you have it, it's vacant. There's a little bit more risk of people maybe hurting themselves or, a claim happening and no one there to know that it happened, like a frozen pipe or something. So naturally, you're going to get a little bit more expense because you have a little bit more things that could go wrong potentially at a vacant property or something that's under construction.
And very similarly, like you said, there's insurance providers that do cover vacant properties. There's some or that don't want to do coverage on them. There's some that don't want to do flips. There's some that don't want to do Airbnbs. I've heard this, and I don't know if this is true. If a property remains vacant for a certain amount of time, I think there's some insurance providers that at that point will require you to change policy or require you to get a different insurance if it's vacant, right?
Yeah, yep. Some carriers have it where you can be vacant for up to 90 days and but no longer than 90 days. So they're basically saying like, hey, in between a tenant, if you're vacant for 30 days, 60 days, but ultimately we want you to have your place rented. That's what we're interested in ensuring. If you're going to go more than 90 days, then yes, we're not the correct policy for you. Is really what that's there for. They don't want to say like, hey, it can't be vacant for more than a day because I pretend that they know their consumer, and anybody that has a rental, like you're always going to have your space vacant for a few days here and there, just as you're transitioning tenants or having to do a little work on the space or whatever. So to have a policy that had didn't have some type of 30-day, 60-day, 90-day provision in there, would be a bad thing. But overall, if you're going to be fully vacant for more than that period, then yeah, they want you over on a vacant type risk policy or a builder's risk policy if it's vacant because you're do construction. And there's nothing wrong with that. As much as it's a pain in the butt to switch, that's just part of being in this space as an entrepreneur. And is it you're going to be doing something. If you went from tenant to I'm going to have it vacant and I'm going to do a remodel, you're doing the same thing. Yeah, you got to switch your insurance, but you're switching your mindset as an entrepreneur. You're switching up your game plan, your business plan. Like everything's changing, so it's just one of the changes. So it just makes sense.
That's awesome. Cool, man. And then what about like general liability loss limits? Like if somebody are there rules of thumb? Like if your property is like 75,000, you should be looking for X amount of general liability or X amount of loss coverage. Are there like certain like rules of thumb that people should be looking for? Or in other words, like what type of coverage should I be looking for? Or do all insurance providers just kind of provide like the very similar coverage for very similar prices?
I think what you want to do is, at a minimum, get the 1 million, 2 million, general liability in place, right? And hopefully, most carriers that you work with, that'll be their kind of standard amount. Anything more than that goes into what's called the umbrella space or the excess liability space. Most people have heard of an umbrella. And this is usually in $1 million increments, and it sits on top of that first million. So if you have a $1 million umbrella, you technically would have 2 million in coverage, the first million plus that million umbrella on top. And probably you talk to 10 different brokers, they all have their phrases on how to, like, how much should I have, right? My first thing is always to say, well, like, how much are you going to get sued for? Like it is generic, so I can give some tips and tricks of like what you should look for. Is you got to think, if someone comes to your property and there's a lawsuit, and they're going to sue you, right? Some people will look at like how much assets they have and make sure that they have enough umbrella to cover their assets so that no one could ever, come after their assets, that they would have enough protection, to go up there. Sometimes it's lender driven, right? Like sometimes it's not even in the customer's hand, at least at the minimum amount. Sometimes the lender will say, for this property and this loan that we're on, we want 5 million umbrella or 5 million in excess. But really that's the trickiest part. It's been tricky in the homeowner space. It's tricky in the auto space of how much liability. It's the same question on the life insurance side, right? When people are looking at life insurance and they're like, how much life insurance should I have? It's like, I don't know. When are you going to die and what bills do you have? It is there. And I like to be honest on that piece of like, it is more like you got to kind of think through the scenarios of like, if something happened in my property where I was going to get sued, and they came out with me with a $2 million lawsuit, what does that look like? Some rock hits kid eye from the person cutting your lawn. How much is their eye worth? How much would they sue? So these are things that, not only from an insurance standpoint, but you talk to your lawyer, talk to your financial, planner. These are all aspects that you want to kind of put together and have some good conversations. It's not just an insurance decision that you want to make here as it relates to that excess liability.
When you said most insurance providers have the 1 million, 2 million, like what did that mean?
So 1 million is so it's the every time you have a claim, it's how much coverage you have. So it's 1 million per occurrence, and then 2 million in aggregate. So every occurrence you have 1 million, but then you have a cap of 2 million in aggregate. Uh, and that's your general liability as far as turning in claims. So if you have you can do the math. You could have $400,000-$500,000 claim, that hit the aggregate. It's just a pretty standard amount. It used to be where a lot of people were at the $500,000 level. Now I'm seeing more and more where 1 million, 2 million, or really I just say the $1 million general liability is kind of the standard. Not only what I see from clients, but from a lender standpoint that meets a lot of the requirements as well.
What about as it relates to loss? Like if there's a fire, like let's say I own a 4 unit apartment, there's a fire, I'm no longer collecting rent. However, I've got a mortgage to pay. What should we, obviously it depends on mortgage amount and all that, but what is typical and what is not typical? And is that similar for floods as well too?
Yeah, so this is the topic that we touched on a little bit earlier that's related to your rental income or loss of rent. So, you have a single family rental and a client is paying, $1,500 a month to rent it. And there's a fire and all of a sudden they're displaced for 3 months and you now don't have that $4,500 coming in because there was a loss on the property side. Your rental income would kick in, and part of the money that you would get from the carrier to fix your property, you would also get that loss of rents paid to you, so that way you're made whole there as well. And
And
then
how
from
long
the
does that typically
yeah,
happen for? Like a year, 2 years?
so every policy is policies are can be different, right? So you could have some carriers will have an allotted amount where you're actually you put in what your 12 months rents are, and so you would have up to that. Some have what's called actual loss sustained, meaning like
Mhm.
whatever you sustained, and they usually put a time period. So they'll put actual loss sustained for 12 months or actual loss sustained for 24 months. Um, so it really depends on which one the carrier goes for, and then knowing that. So yeah, so you could either have an allotted lump sum, or you could have a time period actual loss sustained coverage for that, and that's carrier specific.
Which one would you rather have?
Personally, I think I'd rather have the actual loss sustained, right? Because 12 months or 24 months, 12 months is fine with me. I think that most losses I'm able to rebuild and get the property back up within a year. That's how I look at it. And then I don't have to worry about, from your example of flipping from a homeowner to a rental, like what happens if I insured mine for the rent was 1,000 and now I'm getting 4,000 a month, and I forgot to call my broker and now tell them to go from 12,000 to 48,000. So actual loss sustained is nicer on the broker side because we know our client at least will get like where they're at, and I don't have to call you every month and be like, hey, did rents increase, right? And you don't have to trigger. So that one is a little cleaner and a little bit better in my personal opinion.
I love it. I love it. Good. Are there certain things that like common mistakes that you see with people, like people that come to you and maybe like they have their rental properties insured, but then you look at their coverage and like, well, look, you're not covered here, you're not covered there, or you don't have enough coverage there. Or what are some of the most common things that you see from an insurance perspective?
In the single family space, I feel like the carriers across the board, carriers that I work with and my competitors, I think they do a pretty good job of providing coverage because a lot of the coverages are built in. A lot of the carriers are doing replacement cost tools to make sure you're covered correctly, where they're not letting you dictate what the coverage amounts are. So, I do see that. What I actually see the biggest mistake, and not even like from a coverage standpoint, is there. I guess I'll go there. There is sometimes missing coverages like backup sewer drain, earthquake, flood. a couple of those items that you might want to make sure you have if you're in a different area. But overall, I see it's like the plan of attack with your insurance, right? If you have 50 rentals, you know, I see more people spending weeks and months and years on finding 19 brokers and shopping them out and trying to save, $10 on the unit, where I think that their time is better to do things like get them on, one, maybe one master schedule, or, so that you have to only deal with insurance once a year as far as like your renewal. And you can really then be specific about it, right? And you can really dedicate time like, hey, my renewal is 9/1 every year for my properties. I don't have to do insurance outside of that, right? Because a lot of people, they have 25, 50, 100 properties and they have them all over. So it's like every 3 days they have a renewal. So every 3 days they got to take themselves out of what they're doing and talk to their broker. And as much as I love you and I love that phone call, like I know that's like I'm usually a lot of times put more in like the dentist chair or the thing of like people aren't that excited to call me, at least not every 3 days. So I think it's more the organization piece, and then what is important to you? Is it really saving that $50 on every property, or is it only spending an hour a year on insurance for your properties, right? And I think that's something a lot of people don't consider. They'll be so excited that they save $50 on every one of their properties, but they spent a month's worth of time at their going rate to do that, and ultimately the opportunity cost or the actual cost or whatever you want to classify it is actually worse for them than what they saved on the insurance. So we're going to always push our clients to be organized, think about combining and getting your stuff into like one effective date or one schedule, and then really the ease of use and the speed at which you get your insurance taken care of. And so those are going to be the pieces we concentrate on.
How does one, like, if you have different insurance providers for different properties, how does one get all of them into one? Because I didn't even think about that right now. I have a 25 unit apartment. I have an 11 unit apartment. I have 7 unit, a bunch of 4s, 3s, and 2s, and I think that they all renew at different times of the year, to be honest. And I didn't even think about that. How does somebody go about getting them all in like one effective date?
It's pretty easy. You probably have them on what most people call like a tape or some type of Excel statement of values, or something like that. That's, I'm sure you have them all your properties probably on some type of document. Is, just get them over to a broker that is in the space, that knows how to do schedules or knows how to, just knows how to do the business, is in the habitational space. And you can do it one of a couple ways. If all of your policies have no minimum earned, or, so meaning that you can cancel them at any time, then it's real easy. The broker just will quote them all out, give you all the pricing. You like it. You start all new policies for all of them on one start date, and then you'd cancel all the other ones. Or if you have some that have some minimum earned, right, where you like can't cancel them yet, and then some not. What you then do is you start a master policy or schedule with the ones that you can move today, and then you'll endorse the other ones on as they come up for renewal. But they'll be prorated, added on to that schedule. So then that way, when they, you might pay for 9 months or 4 months, depending on when you're bringing them on. And then ultimately they'll renew all on that date the next year. So depending on what you have, your broker would, look over your policies and tell you and be able to guide you on that and say, hey, we can do all of these. You don't have any cancel fees, or you're outside of the range, or we're going to add 10 now and then do the other 10 as they come up for renewal.
I love it. And then is it better to have like one insurance provider, or is it better to have like multiple different insurance providers just based on the type of property that you have? Or is it better to have it all under one roof if you got umbrella policy, or does an umbrella policy cover things outside that aren't insured with that company, or how does that whole process work?
Yeah, a couple things there. So one, I'm not convinced that it's just one carrier is super always beneficial. I do think working with one broker or one partner in the space is good, who has access to multiple writing carriers, because in this space you might depending on if you're doing different things with your assets, from if you have some that you're, that are vacant, or some that are Airbnb, some are long-term rentals. Like you mentioned, you have some in the 3-4 unit space up to the 24 unit space. There's different carriers for those different sizes, even though you're maybe doing the same type of rental client. The difference between a 3 unit, 4 unit compared to a 24 unit is going to maybe be a different carrier, just from what carriers, right? So I would concentrate on having one good partner, one good broker that can handle anything within the habitational space, from size to type to what's going on. And then have them, be dictating where you go. And then as far as the umbrella question, that's usually not a problem. A lot of times you can have an umbrella with either, various underlying, GLs. You just have to schedule it and, and be part of it. But, so you can have, 5 property policies, that each have their own GL or package. And then you have one umbrella that's over top of them. That's not uncommon, or something that like is something that would, make it where you have to be with one carrier to do that.
I love it. Okay, good. What about like insurance ratings? Like, does that make a difference at all? Like, I've heard that there's A, double A, triple A. I don't even know if that's the exact wording. Does that play
Yeah.
a factor at all?
You know what? It does. It comes up a lot from a standpoint of the lender, and the lender requirements. So a lot of times the lender requirements, they'll state something in there about the AM Best rating, and they're usually wanting, somewhere want an A minus or better, someone want an A, rating or better. And so, you know, that definitely, I would say, comes into play from a standpoint. This is my own personal opinion. I think it comes into play a little bit more from the lender side than like, do I think that it's a big deal in the space between an A minus rating and an A rating or A plus. But this is probably the part of our space that is the most like political, or like red and blue, if you will. Like you talk to different brokers, some will tell you, or in the space, like, oh man, yes, this means everything, because it also is like your experience and your background. If you've had an issue where you've had an insolvent carrier, or you've dealt with that, like you're going to probably be way more like, I only want to work with, these carriers. If you've never had a problem and it's never been an issue, and it's the rating, and you're going, like, you're going to probably be a little bit more on that side. I think a lot of people give you kind of the political answer that like, oh, it does matter. Like, oh yeah, you got to have the best. But truthfully, I think that there's always, just like anything else, there's a place for every carrier, based off of your risk tolerance, based off of your certain situation. That makes sense, right? Just like there's a Mercedes for some person, and there's the Toyota Camry for some person, right? Like you wouldn't say that like you have to have this class of car. It's kind of similar there. You know what you're getting with the Mercedes, you know what you're getting with the Toyota. Some people will say, hey, it gets me to work and back, and other people will say, oh no, it's how I show up at the party and how I look, right? And this isn't going to break down on me, and if it does, I'm gonna have the white glove service, right? So just kind of trying to give you a couple scenarios on that, of how to think about that, and where it does matter and where it potentially might not.
Yeah. And for the viewers that don't know what the ratings means, it basically means that like how much money they have in reserves, or like what are the odds of them going insolvent in case there were like a New Orleans or Mardi Gras type of event where there's like a flood, like the company going bankrupt or insolvent, something like that, basically.
Absolutely, yeah. They're basically wanting, it's them rating them on their financials, and because this does happen, right? Like the hurricane Ian just came through, and there was a lot of carriers that went under, and then that becomes where the state's got to jump in, and and it could get messy. So it is definitely a real thing. But I think there was even some carriers. I haven't memorized their ratings, but just there was a few carriers, and I couldn't tell you if they were A rated or A plus rated or A minus rated, that went under after Ian. And probably if we looked into it, I don't know if it would support the theory of like got to have a great rating, or it would debunk the theory. I guess I didn't really look into it, but definitely there was some carriers that that can happen to, and does happen to. And so I think if you got viewers that want to go look up Ian and carriers that went under and check this out for us, it might be interesting to see that information, but I didn't look it up myself.
That's awesome. Well, not awesome, but it kind of shows that like even
Yeah.
like the highest rating insurance companies with an event of that magnitude could go under basically. So it kind of leads people to believe like what's the rating good enough for? Because if an Ian type of event happens, so if I'm understanding correctly, like if I'm looking for insurance for one of my rental properties, more important than hey, which company I'm going to go with, it's probably having the right broker or the right insurance representative, because that right insurance representative is going to be able to guide you and kind of tell you, hey, look, this is better for you. Also having like somebody that has access to multiple products as well too, meaning like not just like hey, look, this is vanilla but has vanilla chocolate, just depending on your type of on their type of situation. In addition,
Yep.
like questions that they could be asking is like, okay, what is the general liability loss? How does that work? Um, Rating, loss of coverage. Those are all good things to know basically when you're talking to somebody. Anything else that you think would be helpful for our viewers, or that like people who are considering insuring a rental property would be important? And then maybe just a little bit about your company and what makes your company different than maybe some of the companies out there, other companies out there as well too.
Yeah, I think the tip I'll go with is look into your insurance prior to signing your LOI or or going under contract, because insurance, most people will think of it from like what is it going to cost me, which I do think is important to know going into there to get a real cost so that you do go under contract or LOI or whatever your term is of you won the deal or you got the deal, that you really know what that insurance is going to cost and make sure it does make your analyzer numbers work. But more importantly, you can actually use insurance to find out a lot about a property, right? So insurance a lot of times will know things about crime score, potentially, right? That'll know things about flood, if there's potentially there. It'll know about maybe previous loss history from the seller, because a lot that is reportable. And so you could see potentially, let's just say you're buying a little older property and the seller says, oh my gosh, it's got old wiring, but it is perfect. And then all of a sudden you reach out to me as the insurance person. I run the loss history and I see that there was 2 fires from wire malfunction, right? Or issues with the wiring, right? Maybe you want to get out of that property. Maybe you want to have a conversation about, renegotiating now, knowing that you got to rewire this or you got to go with Lumicon or, do something to the property. So there's a lot of things that you can use insurance, not only as just, I have to have it and what does it cost me, but you can use it as a tool. Insurance brokers and carriers have some of the most information in the space about these properties. If the property's been around since 1970, think about it. It's probably had an insurance carrier on it every single year of its life. So like they know so much more than even maybe the seller that you're buying it from, right? Like if you really think about that, we don't go back 30 years with the loss history, usually about 5, but it really just kind of showing the data and the opportunities and the knowledge you can get from insurance outside of just, hey, what's my price? And God, the lender's going to make me have this.
Does it cost anything to do something like that? Or if you have a good enough relationship with your insurance broker, you could be willing to do that?
Absolutely not. And I'll spring this into your second question of like what makes us unique or why, go to us. No, so you can go to our website and quote it out yourself to get a quick price and see if anything's on there. And then if the next day or if you're in the middle of the workday, want to reach out to the team and investigate more. We personally don't charge anything for that. I don't think most brokers do, or most carriers do, to be honest. They're not going to charge you to quote. That's pretty normal process. And so what makes us unique is exactly that. You can get a quote instantly. So if seller calls you up and says, hey, you got an hour to let me know if you want to buy this and what you'd buy it for and put a bid. It's a hot off market property. You could real quick go to our website, type in the address and get a quote and kind of know where your insurance is going to be, on that. And of course, hopefully you have a little due diligence period that you can call us the next day or later that day and ask some questions as it relates to, hey, Matt, anything you saw on this as far as crime or flood or loss history that I should be aware of, and we can help you out with that.
Perfect. Okay. So they can go request that at any point, basically, and then just have a conversation with you, and you would be able to tell them the crime, the flood, or any sort of loss, basically, on that.
Yeah, anything that jumps out to us or we're made aware of by the carrier, the underwriter, that we're able to share. Overall, we'll give as much information as we're able to attain, but it's definitely.
I love it. And then if one of our viewers wanted to get in contact with you or wanted to request an instant quote, what would be the website to do that, and how could people get a hold of you directly?
Perfect. Yeah. So to get a quote, obinsurance.com. OB is OBIE. So Oscar, Boy, Indigo, Edward, and then insurance.com. And then if you want to get a hold of me directly, I am, believe, the only Matt Sutika in the world, Sutika. So any of the social media minus, I think, TikTok. I think I'm on TikTok, but I don't use it. But LinkedIn, Facebook, Twitter, you can, shoot me a message, or I'm a Facebook guy, so I always say add me as a friend, but I know on like LinkedIn, it's add a connection or whatever. So, but yeah, social media is my favorite. I love all the messenger apps and, connecting online through that. And then if you want nothing to do with me and just, hey, I want a quote or I want to work with your team, go to the website, and you can do a digital or our phone number to the companies there if you want to talk to one of our sales reps that help you out on a more conversational basis.
I love it. And one of the plugs that I'll give for you is like, I always like working with people in whatever, like if my tax professional, I like for them to own real estate because I feel like it helps them understand real estate at a deeper level. If my insurance provider owns real estate, I feel like it helps them understand coverage at a different level as well too. And one of the things that I appreciate you is obviously that you own quite a bit of real estate, just like myself. I think that people that are invested in real estate understand it sometimes on a deeper level than somebody that's not, because they have both the practical, like what they're learning in books, but they also have obviously the real world experience as well too. So I want to say thank you for being on the show. For our viewers out there, we had Matt Sutika. He went over rental property insurance. He gave us some tips and advice, how to pick insurance on rental properties. If you've enjoyed this episode, make sure to hit that subscribe button. If you feel that this episode will be helpful for a friend, make sure to hit that share button. Thanks again, Matt. And to our viewers, thank you so much for watching the show as well.